Good afternoon and welcome to Oman Qatar Insurance Company MSX discussion session for H1 2026. My name is Mohammed Jawad, the Chief Financial Officer and the Investor Relations Officer. And I have with me here Mr. Ali Mohammed Al-Lawati, Chief Business Officer. And we have online Ms. Jawahar Al-Ghassani, Compliance Manager, and Mr. Omar Shantari, Head of HR and Admin. Our CEO is actually in an urgent commitment, but I hope he will be able to join us later during the session. So without further ado, we kick off the discussion for H1 2026. So our agenda for today is 9 items highlighting key performance elements. So we will be shedding lights on the board of directors and organization chart, the performance and highlights of H1 2026. That will be the premium and revenue growth in slide 3, the underwriting performance number 4, and the key financial ratios number 5. We will be highlighting the distribution of our gross written premium across different business lines, and we will be concluding with investments and solvency position and market position. In terms of board of directors composition, we have Mr. Salim Khalaf Al-Manna'i, our chairman and chairman of the board, and we have Mr. Musallam Mahad Fatam, he is the deputy chairman, board member and chairman of Audit and Risk Committee. We have Mr. Abdullah Al-Mazaini, he is the board member and nomination committee member. He is the strategy and investment committee member as well. We have Mr. Unni, a board member, strategy member and nomination committee member. Mr. Muhammad Al-Kharousi, a board of director member, audit committee member. Mr. Ahmed Al-Tabaf, board of director member, chairman of nomination and remuneration committee, and a member in audit committee as well. And finally, Mr. Chirag Doshi, a board of director member, chairman of investment committee, and a member in nomination and remuneration committee. So the composition of the board is same here in H1 2026. Moving to the organization chart, the organization is headed by Chief Executive Officer, Mr. Hassan Yassin Al-Lawati, and we have Mr. Ali Al-Lawati, Chief Business Officer, and we have Mr. Omar Shantari, Senior Manager, Government Relations and HR. For the highlights of 2026 H1, we have made it different this time compared to the last half year. So this time we are giving main highlights and comparing it with the previous H. So in terms of gross written premium, the company reported 50.76 million riyal for the first 6 months of 2026. This is 3.4% H1 2025. That gave us 35 million riyal insurance revenue in IFRS 17 compared to 9% year on year in H1 2025. Investment income was extremely positive this year, so it is doubled compared to H1 2025. We have reported 4.6 million Oman Riyal investment and other income. General and administrative expenses, including depreciation, is 800,000 Oman Riyal. This is the unallocated portion. Others are coming in insurance. This is 11% higher than last year. That drives a profit after tax of 2.7 million riyal, which is 41% higher than H1 2025, which gave a return of equity of 6.4% compared to 4.6% in H1 2025. The net asset value per share is 262 Bayza versus 242 Bayza in H1 2025, and the company is running at a combined ratio of 102.4 versus 99.6 in H1 2025, which will be elaborated in further slides. Now going to the premium and revenue growth. So here on this slide, we are comparing 2024 premium and revenue. The gross written premium is IFRS 4 terminology, and insurance revenue is as per IFRS 17, the new insurance standard. So here we are seeing 2024 versus full 2025. and H1 of 2025 versus H1 of 2026, we can see that between 24 and 25, there is a very minor changes in terms of gross written premium and insurance revenue. And when we compare H1 versus H1, we can see that also the gross written premium is almost similar, around 1.8 million real increase in gross written premium. And that also converted into 2-3 million real increase in insurance revenue for the first half. Now, in terms of underwriting performance, which is also here we are comparing underwriting income in IFRS 4 and insurance service result in IFRS 17. So we can see that between 24 and 25 full year, we have 5.8 million real underwriting income reported versus almost 5 million real in 2025, so 800,000 real less. That gave an insurance service result of 1.8 million versus 280,000 real in 2025. Now, if we compare first 6 months of 2025 versus first 6 months of 2026, we have around 3 million real in H1 2025 versus 1.6 million real in H1 2026, and insurance service result of 130,000 Omani riyal in H1 2025 versus 830,000 riyal negative in H1 2026. That will be explained when we are touching the business mix in upcoming slides, inshallah. So going to the key financial ratios, the company reported 4.68 in H1 2025 return on equity versus 6.4 in H1 2026, and a return of investment of 6 2026 versus 3.2 in H1 2025, mainly coming from investment. The net asset value per share, as we stated earlier, is 262 paisa versus 242 paisa. So these are the main financial ratios. So going to the investment, going to the GWB mix per line of business. So here when we are seeing the line of businesses, we can see that the first or the highest line of business is medical line of business, which is around 37.9% of the gross written premiums of the company, which is exactly similar compared to H1 2025. So at this same exposure into medical. However, we can see that the second largest line is property, where it was at 30% last year, but this year it dropped to 28, but still remained the second largest line of business. Life business is 4.7 compared to 4.1. Marine and aviation reduced from 12 million to 8 million. Liability lines reduced, increased to 6% compared to 5.8. So this is the percentages of line of businesses. Now, if we highlight the reasons behind the drop in the underwriting income and the insurance service result, which drive a 102 combined ratio. So the main highlights are coming from two high retention lines, which are medical and personal lines. So in terms of personal lines, the company witnessed a positive performance in the comprehensive policies. However, the company is reporting a negative performance in third party, and the company is taking necessary actions to correct the position in third party policies. The second reason behind the drop in the performance was property, and then after that medical. In property, if we compare 2025 H1 versus 2026 H1, the company received significant claims in property line of business, which was booked in H1 2026. And we believe that the position going forward will be corrected gradually in H2 2026. Going to medical line of business, the line of business was under pressure in H1 2025, and still it is under pressure in H1 2026. The dynamics of medical insurance in the sector is evolving fast, and we are seeing a correction across the sector. And the company took extra precautions to reduce the negative impact from medical in H2 2026. and this will be clearly stated in Q3 performance and final FY 2026 performance. Going to the investment portfolio and income, we have two elements here which we are shedding light on. We have the portfolio composition for H1 2026 and the income composition. So the philosophy of investments in Oman Qatar Insurance is distributing the investment portfolio between equities and fixed income. So equities are 30% of the portfolio and fixed income takes 70%. So 29.9, almost 30% is kept in equities and mutual fund. 55.8 are our bonds and sukuk, and we have 13.6% as other elements. So the company is still 13.6% as other elements. So the company is still maintaining the same distribution between bonds, FDs, and equities. So equities this time are a little bit less than 30% because the company realized a lot of them in H1 2026, and this is clear in the investment income composition. So we can see that the composition this time in H1 2026, 3 million are direct realized and unrealized gains from equities, 1.3% interest income, and third, and the 0.3 is only the 300,000 riyal is only the dividend income, which is lower than the dividend income of H1 2025 because the company realized a lot of these equities. So the investment philosophy is very stringent, it's very cautious, it's toward protecting policyholders' fund and making a fantastic returns. Moving to the financial position and solvency of Oman Qatar Insurance, the company is sitting on a total asset of 119 billion Omani Riyal, which is 8% higher than last year, H1 2025, which was 109 billion. The total equity, the net worth of the company is now 42 million Riyal compared to 37 million Riyal in H1 2025. The total investment base of Oman Qatar Insurance as on 30th June 2026 is 76.9 million Riyal. This is significantly higher by 12% compared to H1 2025 of 68.6 million Riyal. The insurance contract liabilities is sitting at 69.5 versus 65.2 in H1 2025. In terms of solvency, which is based on RBC capital calculation, we can see that the company always maintaining a good coverage ratio and a total solvency well above the required margins. So for 2025, the company reported almost 43 million Riyal as a total solvency amount compared to 17 million Riyal required margin, and this is 121%. If we compare it with last year, it was 111%. So the coverage ratio is improving and the total solvency amount is improving as well. In terms of employees and Omanization requirements, the total employees as on H1 2026 is 213 compared to 205 in H1 2025. And the Omanization ratio is almost similar, 79.8 compared to 80%. So the company is investing in local talents, supporting them and focusing on well-educated workforce to be added to the company. In terms of market position, and we are concluding with this slide, OQIC remains ranked at number 3 in insurance industry by gross written premium. So the company is having a 15% market share across the sector in terms of gross written premium. So with this, we have concluded our presentation and we open the floor for discussions and for questions. Yes. Yes, please go ahead. Yes, Sandesh, you can ask your question.
Yeah, hi, am I audible?
Yes, we can hear you.
Yeah, okay. Thank you for the presentation. I have a couple like questions. If I'm not wrong, you mentioned that your medical segment is un has been the medical segment has been under pressure since 1Q25, 1H25 and 1H26 as well. And
Yes.
can you give can you shed some light on these? Like, what are the pressures that that segment is facing? Also, your marine and energy segment, despite the decrease in the insurance revenue, we see an improvement in profit and the insurance service results. So, if you could share some light on what is happening in that segment as well. Also, for what can we expect for the second half of 2026, that would be really helpful.
Yes, thank you for your question, and it was an expected question. So, in terms of medical insurance, Sandeep, so what is happening is that we are witnessing a increased inflation in medical cost in Oman, and this is also witnessed through globe. So it is a trend now we are seeing. So the company is taking corrective measures, but then when we see the inflation, it is higher than the corrective measure taken. So still, the pressure is coming mainly from the increased reported claims and the cost of claims. So the cost of claim, despite any correction we are taking, it's still increasing, and all the industry is cooperating with the regulator to assess the position and to take corrective action. So it is mainly the increase in claim cost in 2025 and 2026. In terms of marine, Mr. Ali, can you shed some light?
Uh, On the marine portfolio, due to the war situation, we have seen an increase in the premiums, and there has been also some of the clients who have taken war risk. So the war risk premium has also come. So basically, the increase in rates was the cause of that.
Okay, thank you. Thank you for your answers.
Any other questions?
Okay, okay. If I just one more question on the, if I may.
Yes, please go ahead.
Yeah. Also, can you list on your investment plans towards like your digital grow anything regarding digitization, like how are you going forward with this plan as well, like with respect to like on respect to your insurance premium, how is it split between your normal premiums as well as with respect to how many of them are coming through digital modes as well? If you could share some light on that as well.
Uh, on the digital side, uh, we are not looking at this only from a single source of premium generation, but digitization has become a strategy, and the regulators are also demanding that digitization gets involved in every aspect of the business. So we started with appointing a digital transformation manager. Now, the digital transformation manager has the responsibility of creating a roadmap of how we will introduce digitization into the entire process of the company. Currently, we have an online platform through which we can sell our motor insurance, our personal insurance. We also collaborate with the aggregators, so they also are considered as part of the digital platform. We are also introducing digital interaction and digital journey to customers in terms of claims, specifically motor and travel claims. So that's the nucleus of our digital journey. And there is more to come, inshallah, as we go and the new departments start introducing this into the company's aspects.
Okay, thank you. Thank you. And my last question would be on your long-term strategy towards like during the presentation you mentioned you're on the amongst the top three. Like what would be your strategy going forward in 2027 and 28? Maybe if you could share some light there as well.
Yeah.
In the ranking, where do we want to be?
Right. I think in terms of ranking, we are not, we are going to give more focus on our bottom line than our top line. We have been doing this for the last 2 years, but we are going to be even more focused on the bottom line. So we will perhaps in the next session we will say what do we rank in terms of profitability rather in terms of top line. As we said, and as CFO said, that the medical business has been, for example, under pressure. Now, when you have a line that is under pressure, you need to examine and understand what is causing the losses. So you will have to shed these accounts or bring them to your books, and retain them in your books according to the right prices. We are also not very aggressive in terms of motor business, but we are going to look at motor from a dynamic pricing point of view, especially third party where we are seeing some losses. And now we are waiting for the regulator's approval to allow us to do segment wise pricing. So it will not be a broad brush of say 65 riyals for a third party. It will be who you are, where do you live, what is the type of the car, and all that. So there'll be more scientific rating. Now, will that result in making us number 2 or number 4 is not really our focus as much as make more money for the shareholders.
Okay, okay, okay. Thank you. Thank you for your answers and thank you for your time.
Thank you. So we want to conclude this the session with a statement that OQIC received the ranking from S&P based on a parental guarantee of A minus, which is a significant milestone for the company here after completing 20 years of operation in Oman. So we thank our shareholders, our clients, our partners in the business, and especially our regulator for the support and for the trust they gave OQIC during the journey. And we hope for the best in H2 2026. And thank you very much for joining the session and wish you all the best and a happy weekend.
Thank you very much.